Welcome to the AgCulture Podcast, where we share insights about the future of agriculture. Each week, we dive into the stories, technology, and ideas shaping a sustainable and profitable future for farms and rural communities alike. I'm Paul Windemuller, host of the AgCulture Podcast, and today we're talking to Steve Bruere. Steve is a nationally recognized leader in agricultural real estate and serves as the president of People's Company, based out of Des Moines, Iowa. Now, Steve is not somebody new to real estate and agriculture. He spent his entire career, ever since college, being involved in this space. And he's been somebody that many people have said, you got to get Steve on your podcast if you're going to talk about ag land real estate. He's helped expand and develop the People's Company into a nationally recognized company that operates all over the U.S. in agricultural real estate. Steve also established the Land Investment Expo back in 2008, which is a premier expo around agricultural land investment. And they've had speakers like Donald Trump and T. Boone Pickens. So we're talking about somebody that's very well connected across the entire U.S. in many ways. And today we're going to have a conversation around agricultural land and agricultural real estate, how it's changing over Steve's career, and also some of the trends that you can expect into the future. So I know you're going to get a lot out of this episode, no matter if you're based in the U.S. or overseas, interested in any sector. So I'm looking forward to sharing the conversation I had with Steve Bruere. Hey everyone, before we get started with today's episode, I just wanted to take a second to thank our sponsors, Bank Barn. I love these guys and what they're doing to streamline banking and agriculture. They're helping to connect farmers and lenders so that today's farmers have more options no matter the size of operation. Check out bankbarn.io to learn more. Well, Steve Bruere, thanks so much for being here today. Steve, you're with the People's Company, and we're going to be talking about agricultural real estate today.
Yeah, excited to be on, Paul.
I'm looking forward to our conversation. I haven't really had the chance to talk much about ag real estate, and from a professional standpoint, somebody that's been in it pretty much your whole career, correct?
I have. Yeah, I grew up on a farm south of Des Moines, and like a lot of kids, you either are infatuated with farming and farm equipment, or some of us get more inspired by the real estate side. And I always had a inkling and a love for farmland, and so my dad and brother farmed together, but I took the path of getting into the real estate business out of college, and have been doing that ever since I graduated.
Awesome. And you kind of have a unique story about your foray into ag real estate, right?
Yeah. Like I said, I grew up on a farm. My dad and brother farmed together, corn and soybean operation. My grandfather ran the Ford New Holland farm equipment dealership, and People's Company was actually a local farm management firm that my parents farmed for growing up. And I remember Dick Davitt was the farm manager that was managing farms growing up, and Dick would stop by and see how things were going and whatnot. And when I was going to college back in 2003 at the University of Northern Iowa, they've got a real estate finance program, and my real estate professor was neighbors with one of the gentlemen that bought People's Company from the original owners back in that 2002-2003 period. And so I had an opportunity to join People's Company during that ownership transition back in 2003. And that was kind of when I came on board and started ramrodding things around since.
Well, great. And your personal investments into ag land started pretty early, correct? I think I had heard a story about that. You want to share that?
Oh, so yeah, growing up, I had a little sweet corn patch and pumpkin farm like a lot of farm kids do. And we had a neighbor that I was over at his house giving him some sweet corn one time. And this when I was in college, and he said, "Hey, when you get out of school and you get into the real estate business, I've got a farm that I'd have you sell for me." And I said, "Well, what farm is it?" And I went and looked at it after I left his house, and said, "God, I'd kind of like to own this one." And so, my girlfriend at the time, wife now, she actually had a little more cash than my pumpkin patch was generating. And so we came together and bought that from him on an installment contract in college, and really had no idea how we were going to pay for it. And it ended up working out. But yeah, that was my first real estate deal, and able to parlay that into other deals down the road.
Yeah, well, that's something that we have in common. I had a pumpkin patch when I was in college as well to help put myself through college. I wish I would have put that into some ag land instead of maybe my college degree at that. Looking back at it, but that's a pretty neat story. I really enjoy hearing those early forays into investment.
There's some life lessons learned there for sure.
So give us a little more background on the People's Company and what that's turned into today, and what's your role in that?
Yeah, so I mentioned People's Company started out actually in the 1960s. It was a farm management department for a bank here in central Iowa, and we were spun out of the bank in 1972 during a bank merger, and that's when we were incorporated as People's Company. And so we ran as a mom and pop county seat real estate and farm management company from 72 to 2002. And as I'd mentioned, in 2002, that's when the company went through an ownership transition, and a new group of entrepreneurs came in and bought it. And they hired me right out of college. And I got about 6 months in and realized they were going to be more passive in their approach to managing the business. And they turned the keys over to me at a pretty young age and really let me run with it. And that's when we really started to expand the business outside of central Iowa and started to look at what creating a national brand would look like for a farm brokerage and management and appraisal business. And so today, I think we're licensed now. It continues to change, but I think we're up to 33 states that we work in across the country. And depending on which business line, we manage farms in 24 states. We'll handle brokerage work in close to 30 states, and then do appraisal work all over the country. And there's a lot of diversity to it. Again, for a corn and soybean guy in the Midwest, we now get involved with rice and cotton in the Delta, and almonds and pistachios in California, and wine grapes up in the Pacific Northwest. And so it's been a lot of fun to see the diversity of agriculture and work across a lot of different assets.
Yeah, starting out and having that opportunity at a young age, just out of college, I'm guessing pretty green in the industry. How did you develop that business over time? Did you seek out a lot of experts in the space, or what was the mechanism you used to really build the company up?
Yeah, that's a great question, and there's probably a fair amount of too dumb to know better going on there. If I knew then what I know now, I don't know if you would ever, gone after it the way that we went after it. But yeah, I mean, a lot of mentorship. The guys that hired me, Randy Luz is one of the guys that was part of that original group that bought it, and Randy was an incredible mentor and friend, and really allowed me to screw some things up, frankly, and not get reprimanded for it too hard. And then Bob Fridley was one of the original owners of People's Company that they bought the business from. And, when we started, Bob was 70 years old, and I was 22 years old. And I always joked around, Bob didn't know how to turn on a computer, and I didn't know what I was doing. And so the two of us really were able to collaborate well. And we've really built on that model through the years, where we brought young people in and partnered them with, some gray hair and people that are established in the business and can kind of transition that knowledge to some younger people. And I don't know, it's each time you look back, it's been a pretty aggressive growth strategy to get into all these markets. And but it's the market wanted it too, I think, is what I would say. Like the business model of real estate companies was primarily, like I described, that county seat real estate business that served, that local area. And what I started to realize early on is that there was going to be, when you started having drones and online assessor websites and some of these data aggregators like Acre Value and Acre Trader and KMO Ag and whatnot, where a lot of that data was going to become a lot more accessible. To be in the real estate business, you were going to have to cover a larger geographic area than you historically had. Being that local expert was going to look different in the future than it did when I got in the real estate business. And so we really kind of capitalized on that and put the platform in place with all the licensing infrastructure and the service line infrastructure to be able to operate at a national scale. And that's my comment on being too dumb to know better. The market wanted it, and we started ramrodding things around and kept working on it until it started to work. And thankfully, after 20 plus years, it feels like it's starting to work for us a little bit.
Oh, that's great. So, and did you start out expanding geographically before you expanded kind of the different areas that you operated in, whether it be a brokerage and a appraisal and all that type of stuff, or what did that look like as you grew?
Yeah, it kind of all happened simultaneously. The brokerage business was always there, and the farm management business was always there. But we added the appraisal business several years into that, and then we have our capital markets group that came out of recognizing that farmers wanted access to capital and trying to create that connection to capital for farm operators. And so as the business evolved through the years, we've added things in like our energy management group, where we manage both oil and gas assets, but then renewable energy projects. And so, the licensing framework was the first step to start getting licenses outside of Iowa. But then we were building the service lines out simultaneously. And then you were just reacting to what the market wanted and building out those services to give folks what they were looking for.
Okay. What are some of those service lines that farmers should be aware of? As a farmer that doesn't buy land a whole lot, I just think of, well, if my neighbor's selling something down the road, I'm just going to put an offer in and be done with it. I don't need any other type of service other than me calling my neighbor up and saying, this is my price, right? So what do all of those other things do for a farmer, buying or selling?
Yeah, I'd say our capital markets group is probably one of the more unique things that we're doing in that you've got a large segment of the farm population now that's really focused on expanding the acres that they farm. And, they've got a lot of their capital tied up in machinery and their grain setups and their shops and whatnot. And I always say it'd be great if farmers could own every piece of land that they farm, but that's not necessarily the reality. So in Iowa, it's pretty well published that 60% of the land in Iowa is operated by somebody who doesn't own it. And so, that's what I saw in our own family farming operation is my brother would have farms that would come up for sale every year that he wanted to continue to operate. He didn't have the capital to acquire them. And so he would call me and say, hey, do you have an investor who could get into this deal? And the investor would get an off-market deal. My brother would retain the acres. I'd make a little money for putting the deal together. And that really kind of transformed how I thought about real estate transactions, because you always used to think, call the real estate broker, put a sign up, and that's how farms get sold. And it really, that capital markets group was a kind of a unique opportunity for us to create that connection between farmers and capital sources. And we saw a lot of that going back to that 2008 financial crisis. There was a lot of capital that started to say, hey, we like the characteristics of farmland. It's not correlated with the stock market. It's not, it's an inflation hedge. It's positively correlated with inflation. So people wanted access to the asset class, but they didn't know how to do it. And farmers wanted access to capital, and they didn't know how to get access to capital. And that's where we really thought, okay, we can be that conduit to connect farmers and capital.
Okay. Well, going down that path, we've seen a huge run up in agricultural land values here since COVID and even before that. Is that something that you see continuing? Is that interest still there that you're talking about from those capital markets, or is that really cooled with interest rates going up and seeing these land values just go through the roof?
Yeah, it's an interesting dynamic. So, I would say when you look at our farmland transactions, about 70% of everything we sells to farmers. And when you see a lot of these record high land prices, every now and then there's some investor behind it or a 1031 exchange that drove somebody to do something. But more often than not, it's a farmer transaction where it's that 80 you've drove by forever and you have to own it, and you're going to clear out the fence line and those are the transactions where people are generally overpaying. Whereas the investors are, the reason they have money is because they're shrewd and they're smart and they're sophisticated and they're not overpaying for land. And so I think a lot of people think investors are running the land market up, and I don't think that's the case. I mean, I'm sure there's examples where they have, but overall, when you look at the broader market, investors are pretty conservative in their underwriting in terms of how they buy farms. But so the run up in the land market was really driven by high commodity prices, low interest rates, effectively free money, and then a lot of government support that came into agriculture from COVID and the market facilitation payments and some of the tariff payments that came in. All that came in, and when you have free money and high commodity prices, and in Iowa, for instance, there was more payments that came in from the market facilitation payments than there are transactions of land that happen on an annual basis. So when you think about that money coming into the system, it just created a big run up in land values. And so, but to go a little deeper on like the investors, on the flip side of that, the investor appetite, I think, has cooled a little bit. And part of that is because you have alternatives now. For years, people would look at farmland and say, well, I can't get a return on my money anywhere else. If I put it in the bank, I'm effectively getting paid nothing. And when these interest rates went to 4 or 5%, where you could go buy a CD or put it in a money market account and get 5% on your money, all of a sudden buying a farm at a 2.5% return didn't look as attractive. And so we started to see some of that investor sentiment cool as you saw interest rates go up. I'm giving you way more than you asked for, but when you look at farmland, the reason investors want farmland, I touched on it earlier, it's positively correlated with inflation. So when you saw inflation running at 7 or 8%, those investors were saying, hey, bring it on. The more inflation we have, the more we like farmland. And I always say inflation's good for farmland until it's not. And at some point when the Federal Reserve gets serious about not having inflation, the way they kill inflation is by raising interest rates. And then that very act of raising interest rates is what makes your money market, your T-bill, your CDs pay more. And it makes the cost of borrowing higher for farmland investments. And so the inflation's good until you get to a point where they create an alternative investment like the fixed income that becomes more attractive. And then they're serious about killing inflation. And so that's a little bit where we're at right now is the market heated up. And then over the last 18 months, it stalled out a little bit. And as interest rates got prohibitive and you had alternative investments. And then now with interest rates coming back down, the farmland market's getting a little life back in it.
Okay. So you don't think we'll see a bubble like we did in the 1980s? It's not really as much debt driven as it was. There's just a lot of free cash floating around.
Yeah. I mean, when you look at the asset class, there's about $4 trillion worth of farmland in the U.S., and it's leveraged at about 13%. So there's just very little debt, which is a completely different situation from what you had in the 1980s. Now, the political environment's quite interesting right now. And could there be a fundamental shift in policy on biofuels or something that would completely change the way that we look at farmland? I mean, I don't think so, but there's some wild stuff happening right now. And so could there be some black swan event that would impact farmland? Certainly. But otherwise, 1 to 2% of all farmland hits the public market on an annual basis. So there's very little transactional flow, and then there's no leverage effectively against it. And so how do you make that come down in value? If people don't like the price of their farm, they just don't sell it. Right. And so, while the market's cooled off a little bit here, people just decide, okay, well, now's not a good time to sell. I'm going to keep it. And because of that, then that keeps supply even further constricted, which then you bring in the farmers who want to own a piece, the investors who want to own a piece. And you've got that dynamic where supply is constricted and there's still more money than there is farms for sale. And that inherently keeps the land market stronger than maybe you intuitively think it should be.
Yep. Oh, that's definitely a good way to look at it. I was at a conference, Steve, in Canada earlier this summer. And one of the concepts that was brought up, one of the challenges is we've seen returns on farmland go up very incrementally, like very, very slowly over the last 30 years, especially the last 20 years. And as we were talking about just a second ago about the land values increasing dramatically over that same time frame. So as a percentage basis, that net income or that revenue that's generated from the commodity grown on that acre of ground is a much lower percentage than it used to be. So what have you seen, and how has that played a role in how investors and farmers look at investing in ag real estate?
Yeah, so I'm curious. So you're saying the net income per acre on that farm has gone down over time?
I think if I remember right, the graph was total revenue per acre. It's not gone down, but on a percentage basis, it has not grown nearly as much as the percentage growth of the land value.
Yeah, so just using the Iowa example, because I've got these numbers off the top of my head. So you've got two return components to farmland. You've got your cash yield, which is coming from cash rent, and then you've got your appreciation rate. So in Iowa, our 20-year, if you look back over the last 20 years, appreciation's averaged almost 8% in Iowa. And our current cash yield's about 2.5%. And this actually feeds into my fixed income example we talked about earlier. But so if you bought a farm in Iowa, and this is if a monkey bought a farm in Iowa 20 years ago, you would have gotten about a 10.5% total return over the last 20 years, which is phenomenal. And so, but then your farm operator, who's paying that cash rent, how much money are they making operating the farm? And of course, you get all the different years in there where you've got commodity price swings. And when corn's $6, they're doing quite well. And when they're in a lower commodity price environment like we're in today, not so well. But I think we're getting better at producing more with less and covering more acres. And so I haven't studied it in the way that you've described it there to really internalize what that means. But when I mentioned earlier that your average farm yield in Iowa is probably going up 2 to 3 bushels per acre every year, you're producing more on that same acre every year, and incrementally, you're probably farming more acres than you were 10 years ago. Most farm operators are. And so you're producing more, using less, and covering more acres. And so I think that profitability, it just depends how you're going to weigh that. But it's certainly, I think people understand that the returns from farmland, you make your money on the appreciation, not on the annual cash yield that comes from it, because there's just so much demand for people that want to own farmland, and that's where that appreciation comes from. But part of that was driven by cheap monetary policy as well. And when money was effectively free, there was a lot of people. It made it easy for people to want to own farmland. And, if we end up with interest rates in that 6-7% range, it's going to be, I think that's going to put pressure on farmland values, and you might see some of that trend reverse a little bit.
Okay. Yeah, it was an interesting concept, and it was mainly around the Plains provinces of Canada that they were having that discussion. But I thought it was a very interesting insight, and that was one of the reasons that they were giving that, why more institutional investment was coming into the area, because farmers couldn't afford that differential, and that divide kept growing, at least on the plain provinces.
I really think, we've spent a lot of time with these institutional investors and these asset managers, and we do a lot of appraisal work and brokerage work for them. If you wanted to sum up where that institutional capital was coming from, I largely saw it come out of the 2008 financial crisis, like I mentioned, and we've had the monetary policy in the United States, which has bled into other countries. Capital is effectively free. And when you have free capital, so if you think about farmland, and using my examples earlier, 8% appreciation, 2.5% cash yield, 10.5% total return. If you could borrow money at 3, like who doesn't want that spread, right? You're picking up,
Right.
750 basis points.
Yeah.
Yeah. And so like if you were a private equity firm and you were in the business of raising capital, it wasn't a real hard sell to go out there and say, hey, here's farmland. Here, it's not correlated with public equities. It's positively correlated with inflation. This is how it's performed historically. Vacancy rates almost zero. It's underwritten by the publicly subsidized crop insurance system. It was such an easy sell. And all the capital really had nowhere else to go because fixed income rates were effectively zero. And that's all reversed. And so I think you're going to see some consolidation of that institutional investor base because it's now hard to go raise money to put into farmland investments now. But that don't necessarily mean that's going to be any easier for the farmer either to buy it, because those same dynamics are what's making the cost of capital for farmers higher as well.
What going back to the institutional investors and international investors that want to come in and buy up farmland investment, are they really bad for U.S. agriculture, or is it actually a good thing?
Yeah, I think that it's been over sensationalized by the media and by the politicians, frankly, on the fact that there's all this foreign investment. When you really start to dig into it, I've not sold any Chinese buyers farmland, and we handle a lot of transactions. So, and when you look at the list of who these foreign owners are, I think China is ranked number 16 on the list. So. There's a lot of good actors. There's a lot of farm families in South America that have wanted diversified. They want U.S. agricultural exposure. Europeans, UK, Australians, Canadians, that sort of thing. And I think I use my brother as an example. Like you need investor capital in agriculture, right? And like I said, it would be great if we were all independently wealthy and we could all just farm every acre and own every acre that we farm. But that's not how the system's set up today. And so you need outside capital to help with these farm operations expanding. And so overall, I think it's a good thing. And that's not always popular. I've always joked around. Nobody in agriculture likes an investor unless it's their own. And then if they need one for their operation, then that's great. But if that investor bought a farm that one of your competitive operators in the neighborhood's farming for, then it's a bad thing. So I think if you're pragmatic about it and you really step back, investment capital in farmland, it is a positive thing overall. But there's definitely examples where in a particular area, a particular neighborhood, that's probably gotten disruptive in some situations. So I'm not like advocating for it, but it's just a reality of the world we live in.
And now I want to switch gears a little bit more. You mentioned a couple of times some of the new technology coming into the space that's changing the way that your business operates and definitely how your competitors have operated. What does that look like moving forward? What are some of those trends? I know you mentioned a couple of them, but what are some of those technology trends that really seem to be changing how you do business?
Yeah, so when I started in the business in 2003, to get a soil map, you had to drive to the county NRCS office and get the book and then find the page that your farm was on. Yeah, make a copy of it, get your color pencils out, do your own weighted average soil rating. And then you'd have to drive to the county assessor and the county auditor to get additional information. And it was like an all-day job to go and figure out, the information on a farm. If you said, hey, I own a farm in Michigan and this is the section township range that's in, I could pull a file together in about 30 seconds where I'd have FSA map, soil map, topo map, historical crop yields, satellite imagery, just a lot of stuff right at my fingertips. And that's kind of what's it's commoditizing our business, because it's making data more accessible, where in the past, you used to be the person who had that information and only you had that information and people had to call you to get it. And today there's so many publicly available websites where you can go get information on farms without ever talking to the owner or the broker or the manager or whatever. So I think that definitely, in some ways, has changed the way that business gets done. But growing up, I used to have a little bit of a negative view of farm management because, I'd mentioned Dick Davitt, the farm manager, would pull in the driveway, and my dad would say, "Gosh, what's Dick doing here, telling me how to farm today?" And when the way we look at farm management, it's more of an asset management function where you're thinking about how do you make this asset perform at its most optimal level over time. And there's so much more that goes into it today than there ever has been with carbon and wind and solar, all this renewable energy stuff, and soil health. And I really think the farm management industry can actually add a lot of value. Then there's all these payments with EQIP and a lot of different money streams now that are available to landowners. And so I think in some ways the business has gotten easier because of the technology. But then as we've gotten smarter, you realize, wait, there's a lot more that you can do with the technology that's available to optimize how these farms should operate. We do a lot of stuff. We've taken all the RMA actuarial yield data for every county in the U.S., and we've broken down trend line yields for every county in the U.S. for their top crops. So you can start to see which county has the highest trend line yield, for instance, for corn. And so a lot of your counties in like Iowa, Illinois, for the last 50 years, your trend line yield growth has been about 2 to 3 bushels per acre on average for 50 years. So you bought a farm 50 years ago, you'd have 150 bushel more per acre to work with today than you had 50 years ago. And that's the kind of information that's available to you to make informed decisions. And then you start thinking about, like, okay, how do I improve soil health and how do I improve yield on this farm so I can maximize that appreciation in the future? And it's actually quite exciting, but none of it's like incredibly profound either. It's not like I'm sitting here thinking, technology is going to change the way that the world operates. It's just making decisions and data and information more available to make us all smarter.
Yeah, and those are usually the best adoptions of technology. When you see the ag tech companies that's going to disrupt a sector overnight, right? And they're usually not around a year later.
I chuckle because they're, for 20 years, every one of these companies in our space that started up, and I won't say any names, but every time you see the press release, you're like, oh my gosh, these guys are going to put us out of business, and they've got a great business idea. But it's really hard. Our business is a kitchen table business, and it's hard to change that. And you can make people better at the kitchen table, but it's hard to replace the human being in the middle of it.
Yeah, like you said, there's a lot more data that you can bring to the table today, but you're still bringing it to the table and helping the farmer or the investor make a good decision on what they're doing.
You got it.
Well, good. A couple more things that I wanted to discuss about what you do. One of them is this concept of agrihood. You want to talk to us a little bit about that? I know it's something that I hadn't heard until I got a little bit more background in your story, and I'm kind of interested to hear some more detail on that concept.
Yeah, we back in the 2008 financial crisis, when a lot of land developers were struggling, farmland prices were actually going up as development prices were coming down. And I was early in my career, and there was a lot of foreclosures happening with land developers and whatnot. And so we were able to put together several partnerships and help some of our clients buy a bunch of distressed development land that was really effectively at farmland prices. And through that, we ended up, and I don't always advertise it, but we ended up doing a little land development around central Iowa. And at first it was fun. Again, as a farm kid, you're figuring out how to put in streets and sewer and water and whatnot. But that was happening at the same time our People's Company business was taking off nationally. And so, I was traveling around the country for my day job, and then coming home and dealing with erosion control issues and, mowing of lots and things like that. And it turned into a job. And so anyhow, we ended up consolidating a bunch of that development land in this project called Middlebrook, just south of Des Moines. It's a subdivision that's master planned around a farm versus where maybe you think about a golf course as an amenity in a community. In this community, it was master planned around a farm, and it's about 10 miles from where I grew up, and about 10 miles from where our office is. So we put together a 900-acre master plan community that it's called Middlebrook Farm, and the whole idea is we've developed the master plan around this farm, and it's been really interesting to connect urban folks with this idea of agriculture and farming and rural we're in the early stages of it. We're probably about 4 or 5 years into getting all the entitlements in place and the infrastructure in place. But it was a unique opportunity for me to bring kind of two worlds together, land development and agriculture. And you don't see those two worlds mixed very often.
Right. So is the concept to have a farm that the residents of that community could have some animals at, or grow some crops at, or is it just to be around and surrounded by farmland? Yeah, so I toured a bunch of these. There's about 200 of them around the country, and they all have different spins on what a definition of an agrihood is. So we have a working farm that's more of a garden, and we've got a farm stand where people can buy veggies and whatnot on the honor system. And so then we do classes. We have a farmer that does composting classes and things like that for people that live in the community. And there's a greenhouse there where they can rent their own garden plot and, farm how they want to farm within their garden plot. But then they can also ask for advice from the farmer as well. And then we do events called Friday at the Farm all summer, where we have food trucks, farmers market, live music, and then people bring their kids, bring their dogs out and sit around and participate in the farmers market and listen to music and have a glass of wine and that sort of thing. So, and then we brought in a big orchard called Wilson's Orchard that has a food to fork restaurant component, apples, strawberries, cherries. They do the pumpkin patch and the Christmas tree farm and all that sort of stuff. And so they've largely anchored the AgriHood project for us. So, we have all those amenities for folks, but it's a for-profit business that's operating it. So we don't have to subsidize that through the homeowners association or as the developer. And so it's a pretty unique setup. Yeah, it's an interesting concept when I heard it. So I'm glad you're able to share a little bit with us here on that. Well, Steve, before we finish up here, I want to give you a few minutes to talk about a project that you've been involved with for a while now. It sounds like it's probably a little bit of a passion of yours, the Land Investment Expo. You want to talk to us a little bit about that and some of the past guests you had? It's pretty big highlights.
Yeah, I appreciate that. We started hosting this event back in 2008 called the Land Investment Expo. Originally, it was called the Iowa Land Investment Expo, and here we are, 18 years later. And it's been a passion project for sure, bringing people together, and we've tried to bring in interesting speakers that maybe folks in agriculture haven't had an opportunity to historically hear from. So you'd mentioned some past speakers, Boone Pickens, Donald Trump, Mr. Wonderful, Kevin O'Leary, Martha Stewart, General Kelly, Anthony Scaramucci, Jimmy John. We've just had some really awesome keynote speakers that we've been able to hear from and build relationships with and meet. And in addition to that, then we do a bunch of breakout sessions, and we really try to give people fresh perspective and pragmatic thought, and bring in speakers that maybe challenge the status quo a little bit. And I've always said, I've got a lot of conservative friends and I've got a lot of liberal friends, and at any given point, if half the room's offended a little bit by what they're hearing, that's not all bad, right? Because it creates some really great hallway conversations and debate and whatnot. And, we all go to a lot of conferences where it's all rah, everybody sees the world the same way. And we tried to put this together in such a way that people get a little smarter and you challenge how they think about the world. And have some good, healthy debates on things. And, we have a lot of fun putting it together. Our next one's scheduled here January 14th. Got some great speakers lined up again this year, and it's always a work in progress. We're always trying to find those big names, but we've got Steve Eisman, who was the movie The Big Short was based around. We had him several years ago, and just given where we're at with interest rates and monetary policy, wanted to bring Steve back. And then we've got Kyle Bass. Excited about Kyle. He's with Conservation Equity out of Texas, and you'll see him frequently on CNBC. Joe Lonsdale is another big name that you're starting to see, a young guy that is in the news a lot. He actually worked at PayPal as an intern back when Elon Musk was at PayPal, and now Elon and Joe are good friends. And
so Elon will be there this year. Is that what you're saying?
But, I'm trying. Let's just say that. But Vivek Ramaswamy was on the program 2 years ago, and now Vivek's heading up the Doge task force with Elon. So it's been interesting to get some of these folks that are connected with the incoming administration and get to know them. And yeah, we're always able to get some interesting folks that, like I said, Vivek, when we brought Vivek in, most people didn't know who Vivek was. And of course, now today he's a household name.
Right. Well, it sounds like a great expo and a great time to learn. And those are my favorite places to go is where there's a bit of controversy from the speakers, from the platform, and you get to discuss those things together at your table or in the back hall or over a beer at the bar at night. A few years ago, Farm Bureau sponsors our lunch, and whether you want to call it plant-based meat or fake meat, you use your choice. But we had our plant-based meat speaker over the lunch hour that Farm Bureau sponsored, right? And it's those kind of those moments that are kind of fun, though, because you're forcing everybody to kind of hear each other's perspective a little bit. And to me, there's more commonality amongst these groups, and it kind of ties into the agrihead too. Like everybody wants the same stuff. People want clean water, and they want safe food and whatnot, and farmers want it too. And for me, that's what's been fun, is to pull these two worlds together and find out there's more common ground on a lot of these issues than a lot of people realize. Yep, exactly. Well, Steve, how can people reach out and get a hold of you if they'd like?
Yeah, our website's a great resource. If you go to peoplescompany.com, a lot of the things that we do are on there. And the Land Expo website also, it's landinvestmentexpo.com. And we're pretty active on social media. And so, feel free to reach out anytime.
Great. Well, thanks so much for being here today, Steve. I really appreciate it.
Yeah, enjoyed the conversation, Paul. Thank you.
Thanks once again for listening to the AgCulture Podcast. If you enjoyed today's episode, please subscribe and leave a review. And also, if you could share this with somebody that you know, that would be the best way to help us connect to new people and support what we're doing here to spread the word on insights in agriculture across the world. So again, thank you for tuning in. I'm Paul Windemuller, and I will see you next week for another exciting episode of the AgCulture Podcast.